within the last 6 years, all right? And over and above that, not only have we just been, not only are we able to teach it, but we are doing it in this market in South Africa. So everything that you're going to be seeing, what we are doing here and presenting to you, it is stuff that we do, right? It's stuff that is we do, that is on our books, and we love doing this, right? Right, I'm just gonna start on by saying that I'm gonna put in a disclaimer that, number one, it is very much possible for you to become a millionaire. If you are to follow anything that we are going to be talking about in here, it's very much possible that you can become a millionaire. So it's a disclaimer that I want to put out there so that you know for a fact that these things can happen to you, right? The second thing is that you might have a high sense of wanting to quit your job and focus on property. It happened to me, it happened to Rita, it happened to Seth recently, and it's a disclaimer that I'd like to put out there. It is possible that you can start creating real generational wealth with assets that you can touch and feel, right? I'm just putting it out there. It is very much possible. You might be having some extended periods of excitement. So tonight you might not be able to sleep. I would like to apologize upfront. But this is not about getting you excited. I do that at home and I'm happy, but I want you to get excited over and above. And you can put some action and you can change the game for yourself, for your family. This is what it's all about, right? You can start creating a solid alternative income out of property. At one point, this was a sideline. For me and Rita, that's what it was, okay? It's now our main business. So you can, and you can then start having new life problems. What do I buy? Where do I go? This is the disclaimer that I'd like to put out there, ladies and gentlemen. Are you prepared for us to go ahead, even though I have put out this disclaimer that these things may happen to you? Are you ready? Okay, let's go. Here's a couple of people that have been sending us numerous messages. TJ, I really want a mentor. What must I do, right? How much is it to hire a mentor? It looks like people are looking for mentorships. Can you please be my mentor? All of these people. I've just put in a few of the people that are looking for mentorship. Why are they looking for mentorship? It's because they know that if they are to work with someone else who's successful, they can be successful as well. Because success is contagious. It's about copying and paste. So ladies and gentlemen, by the end of this event, I'm going to be upfront with you, right? I like to put disclaimers. I'm running a session that is called a Black Friday promo, where we will focus on mentoring for the next 12 months, and you will be able to be in the class as well, over and above the mentoring. So 12 months mentoring, and you are paying 1,997. And then we are going to run a class on the 11th and the 12th of December, and you can bring in yourself plus 2 other people, which means it's 3 people. And we will call that the Black Friday promo. So at the end of the session, I want you to be in the class. I want to see you in the class that's coming. Not this weekend, but the other weekend. And you can get your ticket at m5propertyaddicts.com, grow my business. Right, the stuff that I'm going to teach you guys, it is things that have been done with this team. This is the success team. This is my core team. This is the team in which I belong into, and we are always doing deals together. We spend numerous times on the phone cracking deals. Rita, she's based in Cape Town, and she is the CFO of the business. And that's me there at the bottom. Hubert, he does developments. Elize, she's the legal. Terence, he looks after our student accommodation portfolio. And Seth, you just saw him now. He looks after the growth, which is the developments, continuous improvements for people like you who are wanting to go ahead. And Beben, he looks after all of our assets across the country. And you might have heard about us. Some of you said no, but some of you said yes. And you might have seen us actually in any of these places whilst we are preaching the word of property. That's what we enjoy doing, right? Ladies and gentlemen, we are the business, M5 Property Addicts, and our South African business. And the reason why I'm saying to you our South African business is because soon we are going outside the borders of South Africa. 5 years ago, this was not here. 5 years ago, there was no 90 million that was invested in the business. 5 years ago, there was no 71 jobs that were created with us. 5 years ago, we were just employees, and today we are in 5 cities. 5 years ago, there was no 402 investors who is now invested and co-partnered with us on different projects. And then all the 196 and 521 students, all of them were not in existence. Why? Because we was employed somewhere else. But today, 5 years going 6, we now have this business. Are we special? No. Can you do it? Yes. Did we have to learn how to do this? Yes. Was it easy? No. Did we work hard? Yes. Can you do it? Yes. Who wants to be running their own business like this? I want to stop here. I'm going to go into my chart here. I want to see who wants to run a business like this. Or even better, or even a better business. Who wants to do that? Right? Where's the other people? Someone else says, I would love that. There you are. Okay, good. A lot of people are saying that, so you're at the right place. So I'm going to ask the question to you, back at you, to say, what's stopping you? What's the challenge? Okay? What is the challenge? Remember, this is a class, right? So what is the challenge on your side? Why can you not do this? Lack of the right information, right? Lack of knowledge, someone. Capital. Let me know. What's the challenge? I want to hear all of the challenges. I see some of you are typing, right? I'm looking for my keyboard warriors who can type fast. All right, let's go. Capital, information, okay? Where are the other people? Finding like-minded people. Hey, you're at the right place already. I've got a 9-to-5 job, working far from home. So Juliet, I want to tell you a short story. When I started off, I used to work for a company that's called ABSA. Some of you might know it, right? It's a bank. And I used to work outside South Africa. So I used to work in Africa, right? And every 2 weeks, I had to be in the countries. And out of that, I would come home every other 2 weeks. So, but I've done this. So that's not an excuse. I'm not going to take that, right? I've seen a lot of people here that are saying that lack of money, getting investors, lack of capital, no money. You don't need money to do this. I'm going to tell you guys another short story. When I started off this, I was in debt, 5 million. I was in debt, 5 million rand. My wife and I, we had gone out and we had done a couple of businesses. And out of that, we lost 5 million rand. And by the time I went into class for the first time, like what you guys are doing, I actually realized that there is no bank that's going to borrow me some money. And with that, I then realized that I cannot do properties. But the education that I got in the class over a 3-day period within back then, it allowed me to see, it allowed me to start doing, and I've never put in any of my own money. Actually, I've put in 1,000. But I have learned a lot. I've spent more money in getting educated than I have put in a deal, right? So you need money to get educated, not money to actually buy the properties. You don't need money. If you're a clever investor, if you're a creative investor, which I'm going to teach you guys, you don't need no money. Okay, so don't let that as an excuse. All right, awesome. I'm going to jump into the presentation. So we've all agreed we want that form of business. We want a business like this one. All right. So how can I help you to get a business like this one? That is going to be my goal tonight, right? On how best you can get there. Awesome. The real reason why I'm doing this, guys, ladies and gentlemen, is that I have seen a taste of this. And when I say a taste, I mean that there is a bigger picture that I can achieve. This is all about generational wealth. Property can give you that. You can change your family tree. I'm going to share a story with you to say that back in the days when I was born, right? Both my mother and my father, they both abandoned me. And for that reason, I was kind of like left out. So I was abandoned and both my parents left me. And I grew up in a foster home. And with that, what basically happened was that obviously, yes, my foster parents looked after me. But as I continued growing up and I got married, I then realized that I am the only person in my family and I don't actually have any backup in terms of financial stability. So there is no one who can back me up to say, hey, TJ, I can give you 100,000 or TJ, I can do this. There is nobody. I am on my own. I don't have any inheritance that's coming from my father because my father is long gone. Okay. I have no inheritance from my mother's side because she ain't there. Now, I don't know about you. Maybe some of you are thinking, well, TJ, for me, I'm good. So I've got that inheritance. I just want to ask you a question, and I want to see in the chat there, how many of you have a plan B, right? A solid plan B. If your job stops today, I don't want to say your job, but whatever income that you've got, if it stops today, do you have a plan B? If you've got a plan B, say yes. And if you don't have, say no. I want to see in the chat there. And if you're watching us from YouTube, the same thing, ladies and gentlemen. I've got a couple of people that are in the room here, and I'm just asking that question. And you can comment, and you can answer that question. Do you have a plan B? If ever your job or your income, whatever you are, do you have a backup, right? Like for me, I realized that very early on. And I was like, how can I improve this? Right? I see out of around about 20 people, one person has said yes. Right? And someone says that I've got a temporarily yes. Right? So which means that it's not solid. Right? Now I'm here, I want to share with you guys something that can be solid, a proper backup in terms of what you can do. But it's not just a backup. It can be setting you up from a generational perspective. It can set up your next generation as well. Okay. Rich people, they do this all the time. They set up their kids. They set up their grandkids with what? With the real estate. And that's what I'm going to help you out tonight. Okay. Quick question. What is the minimum? If I'm to say to you guys, we're going to start a business today of this property, what is your minimum amount that you're looking for? Right? 101. Whether it is to replace your income, whether it is just to have a side income, how much money are you looking for? Is it a 7,000, 10,000? I don't know. How much money? And be realistic here. How much money are you willing to be replacing? Anel, are you already making $1 million right now? Right? Anel, I think it's Anel zone. Right? So if you're not making $1 million, I'm talking about replacing. So at the moment, if your job is giving you 10 grand, would you be grateful if I give you 10 grand more on your real estate business or on your real estate deals? That's what I'm talking about. Don't look at getting 1 million when you haven't even achieved 10,000, or you don't even have 5,000 as a side hustle. The request is too far. It's unachievable, right? So I want to hear from you, all of you guys. There's about 60 people in the room. I want to see here. There's very few people. Remember, I said, guys, I want you to interact with me. If you're not interacting with me, this thing is boring. I'm already doing this, guys. So let me help you. I want to see where you are so that I can help you. 30,000, someone says, 15, 5,000, 17,000, 10,000 at minimum. Great, awesome, right? And where's all the other people, right? I'm not here to look for, to see participants. I'm here to see, I want to see people that are willing to learn. Willing to learn means that we are working together. 50,000, 10,000, 10,000, additional 20, all right? Additional 7,500. Okay, good. Someone says, I'm currently making 7,200 through rental. How much more do you want? This is Edward. How much more do you want, buddy? Okay, awesome stuff. I really appreciate your feedback. Okay, now, I just want to make sure that we are all on the same page. You gotta have some form of a desire of getting somewhere. What is the somewhere that you want to get to? If you are targeting 1 million and you've never made 500 before as a side hustle, it's too far away. So at least we all know now, we've got an average, I think, around about 40,000 in the room. I saw a couple of 10, I saw a couple of 50s. So let me take a 40,000. I want us to get to a 40,000. How best can we get to 40,000? I'm gonna help you out, guys, tonight. But here's the thing, ladies and gentlemen, a lot of people are going to fail in this thing. So we're going to start tonight. I'm gonna teach you, but at some point you're going to be like, I'm not going to follow up. You're going to get distracted. You're going to hear very soon crypto is going to hit around about 70,000. You're all going to run to crypto. That's a distraction. Or someone else is going to come through with some Tupperware something, and then you're going to be running there. It's easy to make Tupperware, to sell Tupperware, right? A lot of you are already thinking, we can't do this. It's only for rich people. That's the reason why people fail. Oh, I know it all. I already have 10,000 on my property rental. This thing doesn't work. Or I won't go into debt. Hey, debt is the holy grail of making money in real estate. Holy grail. Now, I'm going to ask you not to be an information junkie when you live here. What do I mean by that? You take this information here, the brides are coming through, right? And all you're doing is talking and talking about it, but you're not taking any action. You're not doing anything with it. Stop that. Remember, this is for your family. This is for you. This is to create some solid generational income for you and yourselves and your family. This is one building that we recently bought. We bought this building here. It's about a 20 units, 2-bed, and we bought this thing for around about 5 million. And this is a rental income of around about 99K on it. If you're good with mathematics, you already know that this is a good deal. But ladies and gentlemen, if you are to go out there where I'm saying, hey, you don't have to go on it alone, I can help you to get to buildings like these ones. But hold on, what if you have to get the right education? I can teach you that. What if you have to get the right support, the mentorship? A lot of people are looking for mentorship. We're giving that to you, right? You have already seen our experience in what we are doing. We can pass that on to you. Maybe you want to start, or maybe you want to scale your business. Or no, maybe you don't have money. We'll help you to fundraise money privately. We'll go courses around that. We will teach you how to do that. We will guide you so that your business can be profitable. Some of you, you're running businesses now, or you're running You got a property, but it's not being profitable. Okay, you're subsidizing, and you're thinking that it's money, it's an investment for future. TJ, in 10 years' time, it's going to be working. When I finish paying it off, that's an investment. It's not. Today, it's a liability. It's taking money out of your pocket. I want to help you so that it becomes profitable. Some people who are in my network already are getting what we call vetted deals. So vetted deals is there's plenty of deals that come our way. And some of them, they're not good for us, and we pass it on to other people. And that might be very good for you, right? So with all of this, ladies and gentlemen, you don't have to do this alone. We can help you. And that's why I'm saying to you, you can spend 2 days with us in the boot camp. We're giving you the boot camp here. So we call this the Property Business Boot Camp. And for 2 days, you can spend some time with us. On the 11th, it's a Saturday. The 12th, it's a Sunday. And this is the last training that we're going to be having. Now, we did a quick assessment of everything that we're giving you. So we're going to give you pre-training course material, right? And we'll give you lifetime access to the Property Bootcamp itself, the recording. And over and above that, you get access to the Property Varsity. And by the way, for some of you, you don't know, I write books. So this is my book here that I wrote, which is called From Bed Day to Property Mogul. You're going to be getting that. For all of this, if we were just doing this on a normal rate, like today, our normal rate alone, if you go on our website, you will see that just mentoring alone is sitting on 25,000. Just the mentoring alone. So we're literally giving this away to you for 1,997, right? That's what we're doing here. So the link, Rita, you can share the link there so that the people who are keen to work with us on here can already jump on, and they can start to make their payments, and we'll see them in the class. For those that are serious, especially the guys that said you want to start a business like this, these 2 days here that we are going to be with you, we'll be sharing you all of the secrets, all of the stuff that we've been doing, and you can learn within those 2 days. And for the rest of 2022, every second weekend, not second weekend, every second week, we are on a mentoring call, and we are killing it to get it right for you. All you need to do is to attend, right? And we'll get you to a success. I'm going to stop here for now. Rita, are you in the room?
I am here, yes.
Let's jump on this topic here around buying money. And let's start off. And this is where the training, the real training starts for those that are serious.
Yeah. So it's very important, it's a funny thing that the banks actually, their job, the purpose for them to be there is to sell money. And you can actually go and buy that money. Now, I know it sounds a little bit weird, but they actually have targets of this amount of money that they need to sell. Now, what does that mean? How does the bank actually sell money? They sell it by giving it to you in the form of a bond or other credit, right? A credit card, all of those things. And, we always think, oh, but that's such a bad thing and so on. But what if you could go and buy that money and then use that to your advantage as good debt and bad debt? So we always talk about that. And I remember when I was a child, my uncle always used to talk to my mother about it, about good and bad debt. And I can still kick myself for not asking about, but what does that actually mean? And we're going to go into that a little bit in more detail tonight as well. But for now, the concept that you need to understand is that you can actually go to the bank, take a bond, take a loan, take a credit card, and in effect, what you're doing is you are buying money. Now, where does the bank get that money from that they are selling to you? Okay, they are getting it from the savings of other people putting money into the bank. they are then allowed to, so if somebody puts 100,000 rands into their bank account, into a savings account, they are allowed to sell 4 times that amount. Who do they sell that money to? They sell it to rich people. So the poor people that are trying to save are literally just funding rich people. So in my opinion, it's better to be on the buying side than on the giving and putting your savings into the bank account side, right? Because they give you a small percentage on your money, whereas they charge a bigger amount, obviously, for the people that are taking those loans and bonds. So very importantly, we just recently also started working with a small bank, and we asked them, so you know, how much money can they actually lend out? And they had a target of selling or giving away 50 million rands by the end of this year. So it actually means that the bank wants to give you money. It's not like they don't want to, they want to, they have to. That is their business model. That's how they make their money. Okay, so it's very important for them to be able to give away that credit. But obviously, you know, they need to know, will you actually pay them back? So I want to talk a little bit about how does the bank know that they can give you, they can sell you that money and you'll pay it back? How do they decide that you are a good person to give that money to? And you can actually, and it's in the form of a credit score. So I don't know, maybe there in the comments, if you guys can say whether you have, do you know what is your credit score? Do you know your number? We all have a number. If you have ever taken out any kind of loan, you have a number. And for the guys that doesn't know what it is, you can get and view what your score is on a website called clearscore.com/ZA. And from there, you can then go and check what your number is and how to make it better. So tonight, I'm going to give you guys a few ideas on how to make it better. And the reason also that I want to talk about that is, like TJ said, and we will show you guys later in numbers, why it's important to be able to get money from the banks, right? And that is sort of the magic of property, is to be able to get that leverage or the money from the bank there, right? So I see Trolani saying that the score there is 6. So 6 is really bad. So you need to work on that. And there's a few things that will impact your credit score. All right. So the one thing is that if you have ever had credit before. So if you are like my husband, who never had credit in his whole life before, he doesn't exist for the credit bureau, literally, okay? And he basically has a 0 score. So he will never be able to get a loan from a bank or anything like that, because he doesn't have a credit score. And it's very odd for people at his age. I won't tell you what, because then I'm giving my age away. That do not have a credit score. So the bank thinks, oh, there's something wrong. They don't like it when you buy everything cash, okay? Because you're not making them money. So very important to have a credit score. How do you start one? You can take your you can take out a little unsecured, any contracts that you have, okay, or an unsecured loan in the form of you know, go to Edgar's and get a clothing account. Don't, you know, take the money, but don't use it, okay? Take a small, don't be like my brother and just go empty out his clothing account because he could when he was starting to build his record. No, just take a small amount and then pay that money monthly. So if they give you 5,000 rands, buy something for 200 rands and pay back that 200 rands, not all in one go, on a debit order. For 6 months, you just pay that 210 rands every month. Why? Because it builds that credit record, and the bank can then see that you are good to pay back your loans, and therefore your score increases. So the more of these you have, the better for your record. Another way to quickly and easily build up a good score is if you take out a cell phone contract. Okay, don't go for the iPhone, what the latest one is. No, because that's expensive. But you get the same amount of score benefit from a smaller amount as from a bigger amount. It doesn't matter what the amount is. Just the fact that you have a contract and you are good at paying your contract gives you that great score. And then these days you get those little, you don't even need to get a cell phone, right? You just get a 99 Rand contract and you pay your contract every month, and that way you're building up a score for yourself. Don't miss payments, whatever you do. If you want to, with a credit card, if you have a credit card, pay the credit card, even if it's like the last money that you have in your life, in your check account. Pay your credit card. You don't want to be, you don't want to show that you're paying late or anything like that, because that will reduce your score, right? Why can you just take all the money that you have and just pay it there? Because you can take it out again, right? A credit card is a wonderful thing. You can pay money in and take money out again. And it shows as a payment. So a lot of times what I do is when I transfer money between my different accounts, from my Investec account to my FNB account, I pay it from Investec into the credit card and then into my check card. That way it shows as a payment, and it looks like I've got great habits of paying my debt back. But meanwhile, I'm just transferring money. It has another end destination in mind. So that way, you're building up your credit record quite nicely. And in the beginning, when I was still just working as an employee, I was super scared of credit cards, right? I was like, can't do it. I can't, credit cards are so bad, blah, blah, blah. But at the end of the day, it's not the credit card that's bad. It's the fact that you buy crap with it that's bad, right? So what you basically can do is with your credit cards, now these days when somebody says to me, oh, do you want a credit card? I'm like, yes, thank you. Just give it to me. Because recently I started buying properties on my credit cards. Okay, so you can do that. And guess what? Once you get to a certain amount with the bank, my interest rate on my credit card is almost the same as a home loan, a normal home loan, right? What is that? 8-9% on a credit card. Okay. Why? Because you need to also get up as high up in the levels as possible. When I was an employee, I was like, no, thank you, sorry. I don't want to go to a platinum or a black card or whatever, because the banking fees are so high, right? Who wants to do that? But what you don't know, if you're not on those packages, is literally that they will offer you benefits that you wouldn't even know about if you're still just on a normal gold card or whatever it is that the bank has. When you get to those higher levels, private clients, all of that, they offer you credit cards with low interest rates, and they offer you different types of loan products that you wouldn't normally be offered or wouldn't be available, or you wouldn't just never know about it, because they wouldn't tell you, because they think that, it's not something that would matter or be of interest to you, even though it might actually be. So it's very important to get your credit score as high as possible and keep it there. And these are just some of the basic tips on how to get your credit score high and how to keep it that way. TJ, can you go to the next slide for me, please? Right, so in this one, I want to talk, and I'm sure a lot of people on this webinar knows a guy called Robert Kiyosaki. Okay, if you don't know him, don't say it, don't type it in the chat, because I'm going to be very upset with you. So Robert Kiyosaki always teaches us about the middle class and rich people and their spending habits. And he always talks about our income statements and balance sheets. And how does that work? Okay. So first of all, let me explain. Even if you are an employee, you have a personal income statement and a balance sheet. Okay. I'm going to keep it very basic at this point. We'll work on and it'll become a little bit more complicated later on, where we give you examples of how this works in your favor. So it's just important that everybody understands the basic terminology. So I'm going to go through that in very basic terms. So your income statement is your income minus your expenses. So that's your check account, guys. Your income is your salary, any other rental that you might get, interest that you might earn from your savings, whatever, that is your income. Expenses is everything that you obviously pay. And if you were anything like me, by the 4th of the month, you are broke. Everything that came in just went straight out again. Okay. But why was that? Because of what we do with our balance sheet. So in our balance sheet, you have two things. You have assets and liabilities. Now, an asset is something that brings money into your pocket. So it's a thing that you buy that generates money, that becomes income. Okay, what would that be? That can be anything. It can be a car. And people are like, no, but cars are an expense. Yes, they are. But if you're an Uber driver, it's generating an income for you, then definitely that becomes an asset, a depreciating asset nonetheless, but it's still an asset because it brings income into your pocket, into your check account every month. Liabilities are things that takes money out of your pocket. So if you have that credit card and instead of buying a house that brings money into your pocket, you use that credit card to buy new shoes, ladies. I don't know, what do men buy? New tires for their cars. I don't know. Stereotyping there a bit. Then that money goes straight to, you buy that liability that is actually going to cost you money and takes money out of your check account. Okay. And that is literally how poor people and middle class people spend their money. You get your salary, by the 4th of the month, you're broke. You bought a car. The first thing I did when I started my job was to get a car, right? I had to get a car and then a nicer car and then an even nicer car. And then my car was old and I only had it for a year and a half. And I'm like, nah, there's a new model. I want the new model. And I traded it in. And that way, my liabilities just kept growing and growing and my expenses went up with it. Every time I got an increase and I was still broke. No matter how many times I got promoted, no matter how many times I got an increase, I was still broke. Okay. And that is basically what middle class and poor people do. Now, rich people do things slightly differently. They might start the same as you and me, earning an income through a salary or something small. But instead of going and buying a car, they will buy a property, okay, that's generating an income, okay, that then pays for the car. So let me give you an example. You buy a house. That house, then you rent out. That rental is giving you 10,000 profit a month. And you take that 10,000 rands. You either save it up or you get a loan on a car. But the property pays for the liability, not your normal income, if that makes any sense at all. So basically, your asset is still there. Even once your car's paid off, that asset is still going to pay you back. It's still going to pay you every single month. And that way, you at some point, the more assets you have, at some point, it will replace your salary or your, and if you're really good at it, you'll have assets that provides passive income so that you have to spend very little time on it or no time at all. And that brings in your income that then replaces your salary and it frees you up literally. And that's what they call financial freedom, so that you have choices and you can do what you want You can still work if you like your job, by all means. I'm not saying quit your job. If you love it, no problem. But it gives you options so that you can do what you want, not because you have to. And that is the important thing. So I hope you guys understand the income and balance sheets and why it's important to know what does your income and balance sheet look like.
Awesome. Rita, thanks a lot for this. I'm going to jump in here and quickly talk about, I think the reason why I want to speak about this particular deal is that it's a very small deal and everybody can almost understand it, right? And the numbers here are not very big that it's going to shock our system. It's a 2-bed, 1-bath that we bought. And this was, we saw it online via Property 24, I think it was. And we went to buy this property here. It was on the market for $390,000. And eventually we paid $160,000 for it. We renovated it over a weekend. And 210 was all of the money that we went into, right? That was the full capital of buying and then, the reno. And out of that, we had a rental income of 1,000 rand. Now, Rita introduced to you guys what we call the income statements and the balance sheet. Guys, this is the report of how wealthy are you, right? Or how wealthy are you getting? And if you don't have a balance sheet, like back in the days, I didn't know about this balance sheet thing. And yet I bought 1 or 2 properties at the time and I just didn't have it. And my income statement, I didn't even think about it, that I need to look after it. So today we want to jump in and indicate the fact that if you're buying a property, because remember, this is a business, we are inviting you to the Property Business Bootcamp. This is about a business. This is about running a business, a profitable business, a business that runs investments. So the question now is, if you have to buy a property like this one, what's going to happen on your income statement and the balance sheet, right? And I'm going to stop here. And Greta is going to walk us through that from her side. Okay, Greta, we can't hear you there. Are you talking?
Sorry, I'm on mute there. Okay. Yes, so here's your income and your balance sheet at the bottom and your income statement at the top. And basically what you have is that I'm going to call this thing Kempton Park because that's where this property was. And the income into this property, once it was renovated and there was a tenant in it, was 5,000 rands, right? Then it had some expenses, okay, of 1,000 rands, which was the levies and the rates and taxes. And then now we've got a term here that if you ever hear property investors speak, they'll talk about cash flow. So is your property cash flowing? Means that, is it making a profit? Okay, so that's your income minus your expenses is your profit or your cash flow of your property. Obviously, you want to always be in the green, in the positive, not in the negative, because if it's negative, it means you are actually paying for your tenants to live in your house, which is not cool. So they must pay you. Okay. Then if we look at the income and or the balance sheet, we've got assets there. So in assets, we've got Kempton Park there. Now, you'll remember that they bought this property for 160,000 rands. They then did a little renovation of 50,000. But when you sell the property, when you get a valuation on it, just by virtue of you doing that renovation, it was actually worth 450,000 rands. Okay, so that is your asset value. Asset value is the value of the property after your renovation. The liability amount, so you think, oh, okay, but it was bought cash. Yes, but it was bought cash with an investor's money. So you need to pay that investor back. So it becomes a liability just like the bank. Now, sellers can be the bank, investors can give you money and they become the bank. But in this instance here, it was 160,000 plus 50,000 rand. So that's 210,000 rands in terms of a liability amount. Okay. So now what you'll see is that you have something called equity on your balance sheet. Now, equity again, a positive amount means that your asset value is worth more than your liability value. So if you sell your property one day, you will get this equity amount in your pocket, or if you refinance it. Okay, but that amount is your money. The only thing is that just as a fixed deposit that you would put into the bank, that money sits there and it's your money, but you can only get it once you sell or refinance the property. Okay, but it is equity, and I like to call it my property savings account. That's my check account because that's the money coming into my check account, and this one over here is my savings account, my fixed deposit where I save in my properties.
Awesome. Now that's a 240,000 that we didn't have before. And all of a sudden, we've got a cash flow now of 4,000. I know some of you were saying that I wanted 7,000, but you're 3,000 away from that, right? Now, I want to jump into another deal, right? I want to dive into another deal here. And we say, this is your first deal. You managed to get to this deal, but let's jump on now and talk to another deal. Now, we're going to call this Albert Luthuli project. It's a deal that we bought not so long ago, within this calendar year, actually. We bought it for 1.52 million, and the property value actually sitting on 2 million. And Rita, on a property like this one, again, this is now a property that we've bought for the second time round, right? What's going to happen now to our income statement in the balance sheet?
All right, so now we're going back to this again, and on here, oh, what am I doing? On here, I'm going to call this Albert Luthuli, and in here we had an income over there of 53,720. Now you might ask, how can one house make that much money? It's student accommodation. That's how we roll. Right, so then our expenses are a little bit higher than you would find in a normal property as well. This case, it was 37,342. And now your total cash flow is actually sitting on 20,000 rands, your profit. And by the way, the loan amount that we're paying back because we took a loan on this property is included in that 37,000 rands. So this is extra money after you've paid everything back. And that's what we like to call good debt, because you borrowed some money, but it's making you more money. So it's okay to loan it because you can pay it back plus getting some extra. Right, so let's do this one. The asset value there was 2 million rands. So you'll be like, well, how did that work now? Did you negotiate it very hard or what? No, we didn't. We paid what it cost. We didn't even negotiate on that property because we knew that we could get a higher valuation based on the strategy that we executed with the students and the property zoning over there. And we were able to get a higher valuation on the property. So we didn't need to negotiate very hard there. Then if I take the liability amount, we got 152 million rands on a loan. Okay. Now people can say, oh, but you have so much in debt. Why do you want to do that? Because look at this. My equity amount has now jumped up to 720,000 rands by virtue of us buying this property, getting this extra cash flow, and we're sitting on 720,000 rands. We're almost a millionaire by just doing 2 properties like this.
Yeah, that's it. Right. I'm going to come back to this. There are some people that were chasing around about 15 on 2 deals already. You're there, right? And I'm just going to jump on here, and I'm on talking to another deal here. There we go. And this deal here, another student accommodation deal that we closed on. And this one, we're going to call it Reed Street, right? And on this deal, we bought it for 1.7, and the value of it is around about on 2.9 million. I'm going to tell you a short story on this deal is that the owner of the property that used to stay here sold this property thinking that it's a residential property. But because we are well trained and we saw this, we went to our town planner and we said, hold on, Mr. Town Planner, what is the zoning on this thing? And the town planner came back and says, well, the zoning of this is X. And we said, hold on, but if we had to go to the bank on an X value, on an X rezoning, zoning, it basically means that the price is not 1.7. The prices can be 2.9, right? We went to the bank came back and boom, they gave us 2.9, right? So sometimes you are out there, you know, they say that luck favors the one who's prepared. An ordinary person would have just gone and buy this 1.7, yes, 1.7, but you actually don't know that there is gold here whilst you're paying for that 1.7. Guys, these are the stuff that we teach in the classes though. For you to be able to see what is beyond the eye, right? For you to be able to identify these opportunities. And if you had to subtract a 2.9 and a 1.7, you'd see there already that just buying this property, you're making money for yourself. That's what it is, right? But what's the effect now, Rita, on the balance sheet, right? What's the effect then?
So let's have a look over here. So now you see this is rates. So income over there was 56,880. Our expenses was 23,602. And our asset value 2.9 million. And the liability over there was a little bit more, 172. Okay, so now we're basically sitting on 53,000 a month income or profit and a 1.9 million rands in equity. And I also want to add, right? We didn't pick deals just to show you guys something. We took and we didn't want to make these numbers up. So we took actual numbers and actual properties that we are busy doing right now. We bought them. We are busy with them. These are the actual numbers that we are achieving every single month with these properties. Okay.
Yeah, that's exactly it. This is exactly it, right? So I just want to ask on the guys that are online right now, is this helping you at all? Right? Can you see benefits here of doing this? I want to jump into the chat there. Is this helping you? Right? What happened to the other 65 people? I only see 2 people responding.
And I think while they are thinking about it, I also wanted to show you guys something, okay, which is the magic of property. So if you know anything about property, you would have heard people say that the value of a property doubles every 10 years, all right? However, and this has been proven over hundreds and hundreds of years, okay? But it also depends on where do you buy and all of that stuff. But I want to show you guys what happens in property if your asset value now goes, and I'm not going to say double, right? Because then people can say, oh, but maybe not in the area where I'm going to buy. Okay, fine, I'll take that. And I'm going to say we're just going to increase it over 10 years by 50%. Okay. So the new asset value that you're going to have after 10 years is 8 million rands. And now your equity or your savings account has jumped up to 4.5 million rands, just by virtue of your property values increasing. Okay. On your liability side, if you have a loan or you have debt, obviously you're going to be paying that back, right? So I'm going to say, okay, fine, over 10 years, let's say that you have paid back 30%, only 30% of your loans, okay? So 70% is still on a loan, right? How much money do you have in your savings account right now? Okay, you now basically have 5.6 million rands in your property savings account. However, over the 10 years, you also receive this 53,000 rands into your check account every month. So if you took that money and you put it in a savings account, or you bought more property, whatever, but let's pretend you took that money and you put it in a savings account. How much money would you have had after 10 years? So I'm going to say you got that for 12 months, and for 10 years, you received 6.4 million rands into your check account. So in total, you have received in 10 years, just from these three very simple properties, you would have received 12 million rands. Now, I want to know from you guys tonight, are any one of you on a pension package that can give you that kind of money? After 10 years, not 30, 40, 50 years that you're working, 10 years, only 10 years. And that is, for me, is the gold and the magic of property right there.
I'm gonna let it sink a little bit, because what we're doing here, ladies and gentlemen, tonight is just the tip of the iceberg. Like we're not even scratching hard. This is like, you know, we're just starting. You know, is there anyone who has signed up who wants to jump on? Or is there anyone who signed up? I want to find out from you. If you're signing up, or if you've already signed up to come into class on Saturday and Sunday, just let me know in the chat there. I want to see you. Who signed up already? Right? Or who wants to sign up? Right? If this stuff is helping you, in an hour's time, your mind is like poof, and you're seeing already where I don't want to say stuck, but what you didn't know by coming here, and you're already starting to see, oh, if I do this, if I do that, right? And someone else you're like saying, if I can do this, this is gonna help me, right? So I'm seeing a couple of people, well done. Someone says, me, I'm signing up. I want to sign up. Someone says, I'm still thinking, and I'll communicate with you tomorrow. That's all good, right? That's all good, right? Where's the other people? Because when I asked earlier on, you know, when I showed you guys what we have done as a team, right? I think I showed you guys to say, let me go to that slide, right? Because I think it's important for us. All right. I went back and I showed you guys this result. Everybody was like, yeah, I want to do this. Yes, let's do it. TJ, I want to do this. I want to run a business like this. Yeah. Okay. So now I'm saying I can help you. Sign up. I can help you. Right? And now I'm hearing crickets. Nothing. I'm doing it. I want to help you to do it. Some of you are sitting on the fence now and like, to get taught in December, to go to school. Yo, December, bruh. How about just enjoying a little bit? Right? That's where some of you are right now. You're forgetting the price, what you're looking for. And you're sitting on the fence. Some of you have the money right now, but you're like, I need, right? This is the price. This is beyond the price. You can do better, right? When I started off, I was at minus 5 million. Some of you already have money to start on this thing already. I had bad debt. My credit report was bad. And some of you are already in a better position to start. And you're contemplating on 2,000 Rand. And you want to go and buy properties to give you millions, but you can't spend 2 million Rand. Come on. Then you're not serious. This is not for you. All right? I just want to tell you straight up. Then it's not for you. Because 2,000 can't even buy you a door. If you've got a whole apartment, you can't buy doors like the whole apartment. You can't buy doors. You know, it's not enough. But you're getting the education for 2,000 Rand. You're getting mentorship for 2,000 Rand. There is no mentorship for 2,000 Rand. That's what you're going to get. I would have been expecting all of you guys to be saying, TJ, I'm on it. TJ, I've paid. Right? Anyways, I'm going to continue with my presentation. Those that are willing will come. Those that are wanting to learn will come. Right? Now, ladies and gentlemen, the offer is going to end. I'll make the offer end. Right? So you need to go and sort out wherever your money is or whatever it is that you need to sort out. By this coming Saturday, the offer that I'm giving you guys is going to come to an end. Okay? The offer that I'm giving you guys, it's going to come to an end, and it will come to end on Saturday. So my black offer, the extended version of the black offer, to come to an end on the 4th. So today is Thursday, Friday, Saturday, boom, no more. Okay? Why is it ending then? Because you need to start some pre-course work. There is pre-course that you need to do, right? So there's some learning that you need to do. And you need to learn how to already start doing that. So there's about 20 hours of learning that you need to do. And if you don't start by Sunday, you'll be already late, especially for those that are coming through. Ladies and gentlemen, we can help you. This team here that you're seeing here can get you started. I want you to get out of your way. Some of you are sitting in the way of your success right now with holding on to the 2,000. But when Black Friday was on recently on Friday, you were spending. You were spending. And this is about teaching you to be successful. So help me to get you out of your way, of your success. That's what I want to do. So those that are willing to come, those that are going to jump in, good, well done. Life is not going to be the same anymore. It's going to be amazing. The journey is great, full of issues, full of wins, but building your generational wealth, changing your story, running your own business. Some of you will leave your employment. Some of you will focus on this full time, like what all of us we have done. That's what I'm offering you. That's all. Mentoring for 12 months, starting in from, so the class is going to be on the 11th and the 12th of December. And then thereafter in Jan, mentoring starts hard, right? And you can bring yourself plus 2 other people. Those 2 other people will be online. If you're in a stokvel or in a group of sorts, great. 1,997. If all of you wants to be in the class, we can do 1,997. Speak to us. We'll give you an email address now in the comments where you can drop us an email. If you're in a group, right, tell us how many people you are, and we'll plan something else for you, good price for you, so that you can all be in the class. We want you to learn and implement this hard, right? Now, ladies and gentlemen, there's lots of benefits in real estate. And some of these things, you can miss them. You can miss the legacy of just creating solid income, passive income from real estate, solid generational legacy that you can pass on to the next generation. There's so many tax advantages that comes with this. Some of you already own properties, but you've never had like a zero tax benefit, nothing, zero. I want you to help you to be profitable in your business, to run your own business, to make it win, to pay yourself, create jobs, and be awesome. But no, for some of you, you're going to sit in a space where today you're thinking that you're running, your legacy is sorted. Hey, by the way, doing life today, the way you're doing it, you're still leaving a legacy. Doesn't mean that, you know, if you don't have assets and things, it's like you don't have a legacy. You do, you do. But what kind of a legacy is it? Okay. If you had to die today, for some of you, all of you are employed, maybe you got a small business and it's not structured correctly. When you die, this is what the government is going to take. 55% off what you are thinking is what I've planned for my heirs. Because your structures of doing life, buying properties and things like that. All of you guys probably have properties that you bought in your own name. This is what will happen. I know, TJ, I've got a life policy, man. It's 2 million rand. I paid every month. Oh yeah, 45% of it will go to your kids. Really? How? Figure these things out. I'm not here to help you to be your financial planner. I'm here to help you in the class, to teach you and open up your eyes so that you can create generational wealth for your family. That's what we're doing. Using real estate, using what is there. Our job is to show you what we are doing, not what's in the book, but what we are doing. And you can implement it for your benefit. I am asking you to get you out of the way so that you can be successful. 1,997, that's all I'm asking of you, of your money, so that I can help you. And if you don't have it, tough. But I'm giving up until Saturday. Run around, get it, make the payment. You've got the link. We will see each other in the class. And hey, I've got my new book that's coming out. I think it will be coming out on the 15th of December, or maybe a little bit earlier, which is called Be the First Millionaire in Your Family. Yeah. So that book is coming out. For those people that are going to be in the class, I'm hoping that the printers would have delivered and I will be able to give you that book. Yeah. And if it is not there, I'm still going to courier it to you. I think I got approval from Rita the last time. She says, yes, I can still courier it to you. Is that good? Right. So ladies and gentlemen, I want to show you, for some of you, you're not going to go and implement this. You will come to class, but I'm going to show you something else that I can help you to make money without even you getting a business, right? In June this year, about 10 people came through to us. We had about 10 deals that we had. And an average of round about 10 of them, they qualified for around about 3 million rand each. Some of you already qualify for that. And we went in to do what we call no money deals. So basically what it is that we do developments like this. We were going to be, we are. So these 10 projects here are ready to go. And we went in and we did these developments here. This area normally sells for 3.8, but we're going to sell it for 3.2. And we're going to make profits there of 600,000. Guaranteed, if you are jumping on a project like this, utilizing your credit worthiness of your 3 million rand credit profile, we will offer you 200,000. But I can't do it with anybody if you're not coming to class, because you don't understand the lingo. You don't understand how it works. So if you're not coming into class, I don't expose you to deals like this. Remember, I spoke about vetted deals, right? I can't expose you to deals like this because you don't know, you don't understand. So when you come to class and you understand this stuff and you say, you know what, TJ, I don't want to run a big business. I just want to get my 200,000 every month. I mean, every year I'll do one deal, I'll do 2 deals. I'm good. I can be my exec at the business. That's okay. We'll help you out. What's your return on investment there? 2,000, 200,000. That's your return on investment. Calculate that. No money, zero. All right. But ladies and gentlemen, thanks very much for attending. And before you jump out, I just want to let you know that some of my relationship managers will give you a call, and they will speak to you to say, welcome for those that are moving ahead. But I just want to hear from you, right? Now, I saw a few people here that are saying that they're going to join us. I just want to hear from you. I just want to see from you. Is this beneficiary to you? Has this been helpful? Right? And if it has been helpful, why are you not joining? That's my question to you. Why are you not joining? So I want to see a yes or no. And if you're not joining, why are you not joining? I just want to speak to a couple of people. Edward says, thank you, man. He says it's been so helpful. Awesome. I really appreciate your feedback, Edward. Right. Edward, he's coming on board. Thank you, man. We'll see you in class. Mukhodi, yes. Mukhodi is joining in. Thank you. We'll see you in class. Where's the other people I want to see? It's an eye opener. I think it's Luandi. It is. Forgive me if I'm pronouncing that wrong. It's an eye opener. Yeah, that's what it's all about. We want you to see what you can do, right? I hope we'll be seeing you in the class as well. You haven't said whether you're coming in class or not. Gabriel, I've paid to attend the boot camp on the 11th and the 12th of December. Well done. High five to you. We'll see you in class. It's about you, man. It's about you and your family. You know where your family is. Maybe your background is like mine, where you have no backup and you are wanting to create a backup. And that's cool. You know, we are all in different spaces of life, right? Right. Mabindisa, I think it is, says, hey, the link is not working, right? Guys, can you jump on to see whether the link is not working or not? Someone says, Juliet, can I be paid with Edward or Mukhodi, please? Hey, that's up to you. You can reach out to them. I don't know who they are coming up in the class already. I don't know. Okay. Where's the venue? The venue is going to be in Rivonia. Rivonia is in Johannesburg. So we are going to be in Rivonia in Johannesburg, right? So yeah, okay, cool. All right, so ladies and gentlemen, really appreciate you coming on board, listening to our story, listening to what we do. Whether you're jumping on board or not, the train is not going to stop. For guys that are coming into the class, I'm going to give you a nice surprise, right? And that nice surprise is people that have already been on this program for the last 6 months, actually 4 months. I'm going to show you in the class what they have done, right? I'll ask 1 or 2 of them to come into the class and see their journey. Some of them are closing deals, 2 to 3 deals already. They are making progress, okay? People who are dedicated. And I'm going to give you that nice surprise when you come in. And some of you have started. You want to go into big deals to do blocks of flats like what we do and scale your business. Yeah, jump on board. We can help you too to scale your business, right? There's a lady that was out, I think we got about 3 clients out in the Western Cape. And they've been doing properties for the last 9 years or so, buying small units in a developments here and there and here and there. And they are blessed to have good jobs. So they've been paying off. And the one lady, she was sitting on roundabout, because she's been doing this for about 13 years. And she's sitting on a portfolio, unstructured portfolio, unstructured, right? And everything else, when I looked at it on paper, she's sitting with 6 million, but she doesn't see, she doesn't know that she has 6 million on a balance sheet, right? And because the way that things are just structured, and we've just helped her now to unlock it, we've just helped her now to move everything so that it can all be like in one company, and to avoid the burden of the tax and things like that with our tax practitioners. And all of a sudden, she is seeing more profit on that as a business as opposed to what she had everywhere. These are stories that might look like far-fetched, but you could be the next person telling the same story to other people 2 years from today of what you've been doing, right? And it all starts by just doing, attending a class like this one. That's how I started. I met Rita in a classroom like this one, exactly like this one, in Rosebank a couple of years ago, about 6 years ago. And together we've built this. You are no different from us. You can do it. So ladies and gentlemen, thanks very much. It's been great hanging out with you. Those that will be in the class, we will see you in the class, and God bless and good night.